What is going on, guys? Chase here, back with another trading video. Hopefully everyone had a good trade Monday. We did win our trade today. We took two trades. We lost the first one, sized up on our risk with a second really good profit, and we did win our day. So the whole Discord was passive or funded. It's having a great day. So in today's video, we're actually going to be going over how to trade fair value gaps and inverse fair value gaps the correct way with context, because a lot of Instagram and TikTok gurus will tell you just as soon as the fair value gap inverses, go ahead and enter long or go ahead and enter short, whatever the bias is for that inverse fair value gap. But you guys have to have context behind it. So we're going to be going over what that context is, and a lot of it is going to be looking at liquidity sweeps, where liquidity goes to, ERL, IRL, and we're going to be going over everything that you guys need to know to trade ICT's concepts in today's video. So we're going to be doing that today. It is a good day today, just rewatching my videos, kind of learning from myself. No, I'm just kidding. But hopefully everyone did have a good day, and without further ado, let's hop straight into the video, guys. Alright guys, what is going on? Chase here, back with another video. Hopefully you guys are having a good day. Obviously we did win our trades today, but we did take a losing trade, and that usually doesn't happen. A lot of people don't trade on Mondays. I like trading on Mondays, but I kind of sized down on my risk a little bit just because price can move in some crazy ways. But our Discord did win today. And again, if you guys wanted to go ahead and join the Discord, it's completely free. If you guys do want to trade with us, click the link in my channel description. Thank you guys again for 100 subscribers. I didn't thank you guys, but we did hit 100 subscribers. 100 subscribers. So that's great. But without further ado, let's go ahead and hop in today and show you guys where price was seeking. So if you guys, let's just start just from the basics. We have our fair value gaps, or this, well, FVG is called our fair value gaps. I know a lot of the videos, it might seem like I'm saying fair value, because the captions do it a lot, but it's a fair value gap. Then we have our IFVGs. That's going to be our inverse fair value gap. Okay, so these are going to be two ways, but we can't just trade these. So here's what it's going to be. So our fair value gaps are going to look like this, where we have three candles moving in the same direction. All right, same direction is key. Okay, you can't have them moving in opposite directions. So, and they have their wicks, they have their candle wicks. It's going to be this middle wick. It's a gap. So you're going to take the bottom wick of the third candle, draw a line like this. You're going to take the top of this wick on the first candle, draw a line like this. We can now assume that our fair value gap is going to be right there. All right. So that's going to be our fair value gap. Now, when we're taking a look at our inverse fair value gaps, it's kind of what you guys would maybe expect an inverse fair value gap to be. So we have our candles here. We have our wicks here. And it's when we see candles with usually higher confluence or higher confidence that it's going to inverse, is when we have a big strong candle inversing through it with power, with strength, with brute force. So like this, and it inverses. Then you guys will know, if you guys do trade with us in the Discord, you guys will know the strategy. Then we wait for a fair value gap to form. Price taps into this fair value gap with a rejection candle. We enter in shorts, and then we ride all the way down. That is usually our A+ setup if you guys do trade with us in the Discord. So that is going to be our inverse fair value gap. So that's going to be our two right there. But what happens? We need context. We need context behind our fair value gaps. What this context is going to be, it's going to be our liquidity. That's going to be what we're going to shoot for. So in today's market, all right, we had, if you guys would have caught this would have been amazing. But liquidity sweeps are things like these. We're going down, price shoots up all of a sudden, and we just have a sweep. So this is going to now be our form of liquidity here. We have a form of liquidity here, and that is when it's creating new higher highs with a little bit of a hitch. So you guys can see wherever we kind of consolidate a little hitch when we're creating those, these are going to be forms of liquidity. So right here, right off market open, I mean, we swept, basically sweeping liquidity is taking out new lows. So we took out our previous morning lows, which was today. We took out our morning lows. We took out our previous day's lows. Let's see what other lows that we took out. We took out so many lows here. All right, so we dumped pre-market a lot. If you guys look at a 4-hour time frame, I don't think it's gonna let you look at the 4-hour time frame. Oh, it did. If you look at the 4-hour time frame, we swept our 4-hour. So we swept this and we swept this, and this was back on the 7th and 11th. So we swept a lot of liquidity today. All right, so let's look at the 1 minute. So we swept liquidity. All right, but we have to look at a lower time frame, all right, to get maybe an entry point. So right here, let's go ahead and mark out our fair value gaps on the 1 minute time frame and also the 3 minutes. So we see we have a 1 minute fair value gap here, bearish, of course. I mean, we have a lot. And so when we have a lot of fair value gaps, if you guys watch Dodgy, if you guys know who Dodgy is, he's going to tell you that a lot of these fair value gaps, when we have a lot of them like this, when we're just dumping, this is going to be called a void. And usually price tends to fill these voids. So we have a bunch of fair value gaps here. So let's just go ahead and enter this, our fair value gaps. And these are all going to be our 1 minutes. Okay, so these are all going to be our, oh, did not mean to do that. These are all going to be our 1 minute fair value gaps here. So let's now go ahead now and go to a 3 minute time frame. I don't know. Okay, 3 minute time frame here. So on the 3 minute time frame, kind of the same fair value gaps. So let's go to the 1 minute and let's see what price does. So right now we're just dumping. We took out a lot of liquidity, a little bit of a rejection candle there. Keep going and boom. So we had a big spike, but we haven't inversed any fair value gaps yet. Boom. So we had a strong move, right? We had a strong move to the upside. Now, why we did not take this trade is because we formed a bullish fair value gap here, all right? Our entry we missed. Price never tapped back into this fair value gap. We play off the tap in. So if price would have came here, we would have went long and actually would have got stopped out. But you guys see here, we had a huge rejection candle, which meaning we didn't form a fair value gap. There's no entry there. We inversed this, but with this huge rejection candle, with it, we inversed this, but with this huge rejection candle, we're not creating a bullish fair value gap that price could tap back into. It just was a complete rejection. So we having a kind of a false alarm there. We go up. Now we inverse this fair value gap. Now this one, we had a big strong move. We have big candles up here. This is the trade that we took. We took this trade here, created a bullish fair value gap, second candle, price tapped back in. We inversed the 1 minute. This is also a 3 minute. So we inverse that on a 1 minute time frame. But you guys have to understand the context behind this. We have a set of liquidity here. That price could tend to sweep. Off market open, when we run about hundreds of points, when we run hundreds of points down, we ran like 400 points down, market open. We're not going to see an instant reversal. And I had to remind myself that, and this is why we lost the trade. Rarely do you see price dump off rip and instantly zoom back up to fill up all these gaps. You know what I mean? Like, you're not going to really see a complete V. When we run down that much, if you guys watch Jack Trades, he's going to tell you guys that off market open, he teaches PO3. I also teach that as well. But when we run down this many points off of market open, it's highly likely that we're going to be consolidating. So we took this trade here. We were shooting. Boom. Price tapped in. We were shooting to inverse this fair value gap here. That was going to be our first TPs and then fill the void. Our stop loss was going to be below this inverse of this fair value gap here, because we keep our stop losses tight. You don't want to really enter trade, and we did drop it down. We dropped it down to the inverse of this 3 minute because you want to give it some leave room, but you also don't want to have a super leeway of a stop loss. You know what I mean? So now a lot of people had their stops all the way down here. That would have targeted a 1 to 6, 7 RR, but you guys will see. So if you guys want to play it a little bit lenient here, we can go ahead and watch price just immediately inverse this fair value gap here. All right, if you guys would have had your stops all the way to the inverse of this fair value gap down here, price just immediately inverse that as well. So it's highly likely that we have this consolidation phase, and then we did get stopped out on this, lost about $700. We will see consolidation. But right here, I can't switch because it's going to remove the replay, but we had a sweep of liquidity down here. Went and grabbed this liquidity. We also, I can't search it up, but we had SMT, bullish SMT. Is when one's creating lower lows, one's not. Like this. Alright. So, that gave us confluence. Now we have to wait for a time to enter. Alright, so let's wait here. So boom. This, we just created our first, so let's go ahead and take out of this box. We created our first bullish 1 minute fair value gap here. Price never tapped in. Never tapped in. Boom. Right here. We created a bullish fair value gap. Price tapped into this right here. This would be your entry long because you had a bullish fair value gap. Price is tapping back in. We took out both of these highs right here. We already had our consolidation phase. We took out highs. Boom. Didn't make any new higher highs. We're not shooting for new lows because we didn't scrape out lows right here. We took out some liquidity here and here. So we enter longs here. Boom. And here we go. We targeted these highs and boom. Immediately broke them. Filled all of these gaps. And so that is going to be the trade that we took today. Now, obviously, we dumped later on in the day. But we filled all of those gaps. All of those gaps. So that was the trade we took today. And that's how you guys are going to trade. With higher time frame PD arrays, confluence, and yeah. So if you guys did enjoy the video, go ahead and hit that like, subscribe, follow, everything. And if you guys do want to trade with us for a week straight for completely free, click the link in my channel description and comment down below anything that you did like about this video. And I will see you guys in the next video. Peace.